Good morning students, welcome to today's class. Before I begin today's class, a quick revise of the last class. We learned in our last class chapter 3 money and credit from your economics, and the topics that we have covered in our last class is money as a medium of exchange, modern forms of money, loan activities of bank, and two different credit situations. So today we continue the same lesson. Other three topics we will complete today. First one is that is forms of credit. Now terms of credit, when we speak about terms of credit, it includes mainly that is interest rate, collateral, document requirement and mode of repayment. It comes under terms of credit. Now when we speak about terms of credit, now if you go to take money from any lender, they will not lend you simply. They will ask you to abide by some terms. So these are the terms when we are going to the bank to take money as a credit or as a loan. Now when we speak about interest rate, now you are taking a 50,000 credit from the bank. Now for this 50,000 you need to agree that you pay this much amount as interest. That is called interest rate, and it differs according to the credit which you are taking. So interest rate with the principal amount, whatever amount you are taking, if you are taking 50,000, then you have to pay back 56,000 or extra, whatever terms they put forward to you. And second one is collateral. When we speak about collateral, when you are taking large amount from the bank, they will not simply give you. They need some proof, some security for the money or the credit which they are giving you. Now that is called as collateral. Now this collateral can be in any form. That is, it can be a land which you are having, or a vehicle, or a building, or a livestock. Now you have to produce before the bank the detail of all these, the land that you have, or the vehicle, or the house, or the livestock, whatever you possess. You have to produce before the bank as a proof, as a security that you are able to pay back the amount which you are taking as a credit from the bank. And third one is document requirement. When the bank goes through all this and confirms and agrees, that is the agreement between the lender and the borrower, the credit taker. Now requirement, you need to sign the document, and the bank also will sign your document, and it is handed over to you, and the bank keeps a record for their proof. And last one is mode of repayment. Now if you have taken such a big amount, how will you pay back this amount? Then they keep a mode of repayment, whether it is weekly, whether it is monthly, whether it is quarterly, and what amount you will pay back. All these comes under mode of repayment. Okay, now here these comes under terms of credit. Okay, that is interest rate, collateral, document requirement, mode of repayment. You need to be sure about collateral. What is collateral? It is the thing which you produce as a proof or the security for the credit which you are taking. It can be any form, that is land, vehicle, and these papers you need to submit to the bank. Now there is an example of Megha. Now Megha, she goes to the bank and wants a loan or a credit from the bank for buying a house. Now she is asking 5 lakh credit from the bank. Now will the bank give 5 lakh without any proof, any security? No. Now what does Megha need to do? Megha need to abide by these terms of credit. That is, she need to abide by the interest rate of the bank. Now bank is giving her 5 lakh rupees with the interest of 12%. So she agrees with that. Next one is collateral. Now what is the collateral she has to produce before the bank as a proof? Now she has to produce before the bank, that is the job which she is doing, the salary information, how much salary she is receiving, and the papers of the house which she is going to buy. These are the things she produces before the bank as a collateral. Now bank goes through all these, then finalizes the document and they sign the document and it is kept as a proof. Now mode of repayment. Now bank is telling Megha to pay this amount within 10 years period of time. Now Megha agrees that she will pay this amount within 10 periods of time. Therefore she receives the loan or the credit from the bank. Next they have given you some examples, that is example of Shyamal, Arun and Rama. Now these are the examples for the variety of credit arrangements where we get the credit. One we learned already about Megha. From the bank she takes the credit for her purpose of buying new house. Now what about Shyamala? Now when we speak about Shyamal, he is a person who is cultivating in a piece of land, that is 1.5 acres of land he is having and he is cultivating. Now for this cultivating he needs some credit. Now where does he go? First of all he was taking this credit from the money lenders. Money lenders, they were helping and giving the credit and they were charging him, that is 5% of interest. Now after some years he got another opportunity to take credit from a trader. Now the trader agreed to pay Shyamal, that is 3% of interest. So he agrees and he takes. Now what happened in his case, that is Shyamlal case, at the end of the harvest time, there is an agreement between the trader and Shyamal that all the crops which he produces from his land, he has to sell to the trader. Now trader buys this produce and what happens, the trader stores and keeps this produce and sells when the price is high and he receives the benefit of this produce. Who receives the benefit? It is the trader who receives the benefit. But in the case of Shyamal, what happens? He does not benefit anything, only he gets the credit with less interest from the trader, that's all, and it does not help in any way Shyamal. Next one is Arun. Now he is also another farmer who supervises the farm and he has got 7 acres of land and he sees all the produce. Now from where does he take credit? He takes credit from the bank and the bank is giving him this credit and he uses this credit and what happens? He gets a very good produce and this produce he uses, a part of it he sells and pays back the loan which he has taken from the bank, and rest what he does, he stores in a cold storage. Now when he stores in a cold storage, when price goes high, he sells this and he gets more money and he is able to benefit from the loan that he has taken from the bank. And also he takes another loan for cold storage for storing things also, and the bank is ready to give because he has taken already loan and he is paying back this loan through the produce. So it is Arun is getting benefited, but whereas Shyamal is not getting benefited. Next one is Rama. She is a daily age earner and she goes to the field to work daily and he gets some amount. Now whenever there is work she is able to manage, and when there is no work out of season, when no work, what does she do? She needs urgent need, one falls sick in the house or some celebration in the house, she does not have any amount. She goes to the landowner and asks for amount, and landowner gives her or lends her the money because she is a daily age earner. And what happens, before she gives back the amount, she is in need of money again. Now again she takes from the landowner. So this process continues, and as a result she is not able to pay back. She goes into a debt. And when we speak about this landowner ill treats her. So this is a situation where the credit is taken by Rama, does not help her to come out of her problem, but it makes her to go into the problem in deep. Okay, now these are the different sources from they are getting credit. When we speak about, he is getting from the money lender or trader, second one is from the bank, and third one is from the landowner. And next one is, apart from bank, we can speak about cooperatives. Now what are these cooperatives? Cooperatives are societies where people come together and form a group. Now these cooperatives are formed, and these members collect the money from these cooperatives, and this amount, it becomes a very big amount, and this amount is help us to give loan to the members of the society or outside. Now this is one of the another source which helps the people to get the loan easily than from the money lenders or traders, where the interest rate they have to pay more than what they are able to do. So cooperatives is one of the good source where the people are getting credit to help themselves. Okay, now this is all about terms of credit. Now second one is we are going to study about, that is formal sector credit in India. Now when we speak about formal sector credit in India, there is also informal sector credit. So when we speak about formal sector, that is bank and cooperatives. Now these are the formal sectors credit. Now these formal sector creditors, banks are monitored by RBI bank, that is Reserve Bank of India. Now all the banks in India are monitored by the Reserve Bank of India. Now what is the monetization that is done by the Reserve Bank of India? Reserve Banks goes and takes into account how much deposit every bank gets in a year, and how much they are lending to the borrower, and how much interest rate they are taking from the borrower, and also to whom they are lending this amount. All these details are monitored by the RBI, Reserve Bank of India, and regularly these banks are asked to submit a record of this amount, whatever amount they are receiving as a deposit, how much amount they are using to lend, and to whom they are lending, and what interest rate they are taking. And RBI makes sure that these banks, they not only stand for the rich section of the society, but they make sure that they benefit the poor section of the society also. But it is not to the 100%, to some extent RBI able to monitor this. And second one is informal sector. When we speak about informal sector, that is money lender, trader, employer, relatives or friends from whomever you are taking. Now when we speak about money lender and others, it is not monitored by anyone. Now when we speak about not monitored by anyone, what will happen? A money lender may charge more interest when he lends the money to the people, and he may also ill treat the persons to pay back the amount which he has to pay back. So now it happens to all others the same. Okay, this practice can be done for all other informal sector, those who are paying the amount as credit. Now here the people are at victims, because any amount you take, you need to give high interest rate to these lenders. Now when you are not able to pay high interest to the lenders, they can use in any means to take back their amount. So this becomes an informal sector which is not pleasing for the practice of the lending and taking the interest in the society. And now when we speak about this informal sector of the society, now what is ours? That is cheap and affordable credit can help the country's development. Now, cheap and affordable credit can help the country's development. Now, we have to question and we have to find out, are all the people able to afford themselves to take formal sector credit? No, they are not able to take credit from the formal sector. Why they are not able to take credit from the formal sector? Because they have to produce collateral when they are taking money from the formal sector, and many of the poor people, they are not able to produce this collateral. As a result, they are not able to avail themselves the loans from the formal sector, and when they are not able to avail themselves to the credit from the formal sector, automatically they remain as back and they not able to help the country's development. When everyone contributes for the income of the country, then there is development. When section of the society are not able to contribute, then automatically development is slow. That is what happens when we speak about formal sector and informal sector. And when we speak about large number of the people are in the poor section of the society. Now, when they need money during the time of their cropping seasons. In the starting season they need, and when it is provided, what they can do? They can grow crops, or they can start a business, or they can start up a small scale industries when they are provided with these loans. And when they are not provided with these loans, they are not able to contribute for the development of the country. Now, next in this, that is formal and informal credit survey. They have done a survey in India to find out from where the people are taking the credit, whether it is formal sector or informal sector. And the survey shows that whether it is urban area, whether it is rural area, and most of the people, that is 80% of the people are going to the informal sector for their credit, not to the formal sector. Now, when they are going to the informal sector, what happens? They are still oppressed, and if they are able to afford to the formal sector, then they are able to come up. So now what is the conclusion? Now, conclusion is that the banks and cooperatives had to extend their help or support to the more to the poor or the rural areas. When they are doing this, what will happen? There will be two things. One thing is that they are able to, those who are depending on the informal sector, their dependence on informal sector will reduce, and they will start going to the formal sector. And when these terms which they have to fulfill to the bank, if they have taking into consideration, then they are able to help these people who are going to the informal sector credit. And second thing what they can do is that this formal sector has to expand in the rural areas. When they are expanding into the rural areas, it will improve and make sure that they go to the formal sector. If they are not able to expand to the rural areas, the people in the rural areas automatically they depend on the informal sector. When it is done, then automatically they will stop going to the informal sector loan, and it will help the poor people to depend more on the formal sector of loan. And next one that is self-help group for the poor. That is the last topic in this chapter, self-help group. Now, this is a latest idea which came into existence, that is to help themselves by forming a group, self-help, helping oneself. So, it is mostly in the rural areas. Women come together and form a small group like 20 to 25 members. Now, these 20 to 25 members, what do? They meet regularly and they save money regularly. Now, it may be from 25 rupees or 100 rupees. They collect monthly, weekly, something they collect, and this amount is used to help the members in the group. Now whoever needs help, this amount will be given to that person, and they may charge a little interest. Now this interest will be mostly lower than the money lenders which they are asking during the time of lending. So this way these self-help groups help themselves in the rural areas, especially women coming together. Now when this group continues this practice for 2 years, now what happens, this becomes as a recognized group. Now this recognized group can easily approach the bank for the loan, where they cannot approach the loan as a single person, but as a group you are able to approach the bank, and the bank is ready to give loan in the name of group. So that way self-help group is helping themselves. Now in these self-help groups, what do they do? During the time of cropping, they give money for buying seeds, buying fertilizers, or buying raw material, all those things. And sometimes they also arrange sewing machine and handloom and other cattle. All these are in the group, they decide and help the whatever possible means these group to come up with the savings what they have, and whatever loan they are getting in the name of the group, and these are also they are utilizing to arrange themselves into a group and to build up something and to sustain themselves. And the last point in this, that is Grameen Bank of Bangladesh. Now this is one of the example in this chapter they have given, that it becomes one of the great success story. You know the Bangladesh is a very poor country, and people are above 60% of people are below poverty line. Now there was a bank that they established called as Grameen Bank in 1970, and when they made the survey in the year 2014, they found that 8.63 million people are members of this Grameen Bank, and it has spread in 81,390 villages in Bangladesh. And mostly who are the members of this Grameen Bank is the women, and these women make available of the credit which they are getting from this bank, and they have come up in life and they have developed, and not only they are proved themselves that they are able to benefit as well as able to contribute for the nation also. That is what they have proved in Bangladesh through the Grameen Bank. So now we come to the end of this lesson. Now you read the lesson, understand the topics, and all the examples that they are given, that also is very important. Thank you, students.